Stephen Vegas with LiveInsuranceNews.com, bringing you the major headlines from this week in insurance news.
Cyber insurance is Zurich's new focus. Zurich Insurance Group is broadening its focus to be able to meet the growing corporate demand for cyber insurance. A growing number of businesses are seeking cyber insurance to cover themselves against the economic challenges associated with data breach and other such attacks. Zurich notes that the market is still relatively small, but is showing signs of rapid growth. Insurance industry professionals must cope with regulation risks. A new study shows that regulations concerning market conduct and solvency could prove problematic for many insurance industry giants. The study shows that insurers are primarily concerned with the European Union Solvency II directive, which could pose a financial challenge to many companies with a presence overseas. Some insurers have expressed concerns regarding the apparent instability of the global economy, which is causing insurers to reevaluate their presence in some foreign markets. Health insurance costs in the U.S. are lower than anticipated. Data from the Department of Health and Human Services suggests that the cost of health insurance is much lower than had previously been anticipated for small businesses and consumers. Health insurance exchanges are cited as the main reason behind dropping health insurance rates, according to the federal agency. The agency suggests that comprehensive insurance plans in the 10 states managing their own exchange programs are 18% lower than previously predicted. Insurance news made in New York when judge blocks 9/11 claims against airlines. Federal Judge Alvin Hellerstein has ruled that the owners of the World Trade Center are not permitted to demand billions of dollars in compensation due to the events of September 11, 2001. The trial was held to determine whether the owners were due more money on top of the $5 billion they had already received in reparations. World Trade Center Properties has sought to attain this money from airlines that were associated in the 9/11 event, and the organization claims that it has yet to receive the $3.5 billion that it is due from these airlines. Insurance industry estimates damage of Black Forest Fire at $300 million. The Rocky Mountain Insurance Information Association has released an assessment on the damage caused by the Black Forest Fire in Colorado. The organization estimates that the disaster caused nearly $300 million in damages, making the Black Forest Fire one of the most costly wildfires in the state's history. The organization has also issued warnings to victims of the disaster to beware of fraud related to the recovery process coming from dubious representatives of repair companies.
That's it for this week's news roundup. Be sure to visit LiveInsuranceNews.com for active coverage of the issues that matter to you.